Welcome to this training program on financial management for federal grants. This particular program will focus on financial management for tribal organizations. The topics that will be covered in this program are the same as those covered in the Office of the Chief Financial Officer's two-day financial management training seminars. Individuals responsible for the financial administration of federal grant programs are encouraged to view this program. Hello, my name is Michael Williams, and I'm a staff accountant in the Department of Justice, Office of Justice Programs. I frequently conduct a two-day training seminar on the life cycle of a federal grant. This program will cover the pre-award process through post-award to include the grant closeout process. Joining me today is Suhaila Lasky, a grants financial analyst with the Office on Violence Against Women, who works in the Grants Financial Management Division, and William Bill Faith, a staff accountant with the Office of Community-Oriented Policing Services, who works in the Administration and Finance Business Unit. Let us start with the organizational structure for the Department of Justice. DOJ is headed by the Attorney General, and under this umbrella, there are three primary grant-making components: the Office of Justice Programs, OJP, the Office on Violence Against Women, OVW, and the Office of Community-Oriented Policing Services, COPS Office. Under the organizational structure of OJP, there are 6 bureaus and program offices that are supported by multiple support offices. For example, the Office of the Chief Financial Officer provides timely, accurate, and useful information, along with oversight to ensure financial integrity in support of OJP's mission. I will now turn it over to my colleague, Suhaila.
Here we have the organizational chart for the Office on Violence Against Women. As you can see, the office is made up of many different divisions, the largest being the Grant Development and Management Division, which house most of the grant managers and financial analysts you have worked with in the past.
Here we have the organizational chart for the Community-Oriented Policing Services, also known as COPS Office, as it stands to date.
The federal budget process. It may be helpful to explain the federal budget process in 4 separate phases. The first phase is the planning. The second phase covers the review by the Office of Management and Budget. The third phase is the congressional appropriation. And the fourth and final phase is the execution of the budget by the agencies starting October 1st, which is the beginning of the federal government's fiscal year. However, disagreement over the spending plan may result in either a continuing resolution, CR, or a federal government shutdown. So, the budget process begins in February when the President submits his proposal to Congress, or the authorization process. It is here where programs are defined, dollar amounts are proposed, and the case for White House spending are supported. Next, the appropriation reveals the actual dollars Congress has provided to each agency or department. However, the full amount will not be dispersed to each agency, but proportional divisions of funds will be made by OMB. The head of each agency can now incur obligations and or make awards under the allotment process. As a result, grant recipients are able to make obligations against awards, incur expenditures, and receive disbursements from the U.S. Treasury to liquidate those obligations. Now, let us discuss an adequate financial management system. All recipients are required to establish, maintain auditable accounting records, and to be able to accurately account for funds awarded to them. Additionally, each award must be tracked separately from other grants and other funding sources. For example, the federal award matching funds and program income should be tracked separately. States, non-federal entities and tribal governments should follow their own policies and procedures. However, those procedures must include guidance to adhere to applicable federal statutes, regulations, and terms and conditions of the award as well. Recipients should follow the most restrictive policies. Grant recipients are responsible for proper stewardship over federal funds and must ensure that federal resources are used efficiently to achieve the desired goals. A good financial management system will contain strong internal controls that allow for efficient operations, reliable financial reporting, and comply with applicable laws and regulations. In addition, a good system will include adequate segregation of duties. Proper segregation should ensure that no individual can either conceal or misdirect funds within their agency. Recipients must maintain an adequate system of accounting and internal controls, plus ensure that an adequate system exists for each subrecipient. An adequate accounting system must present and classify cost as required for budgetary and evaluation purposes. Be able to provide cost and property control to ensure optimal use of funds, and must also ensure that grant funds conform to any special or general conditions. An accounting system should meet the requirements for periodic reporting and provide recipients with financial data for planning, controlling, measuring, and evaluating direct and indirect costs. So, in summary, if your accounting system can track the receipts, the award made to your organization, the obligations, salaries worked or equipment purchased, and finally, the expenditures of those funds paying for those obligations, generally the awarding agency will consider the financial management system adequate. Now I will turn it back over to Suhaila.
When administering federal awards, there are various regulations and legal authority that dictate how the funds should be administered, both by the federal agencies and the award recipients. First is the authorizing legislation, which is set by Congress. Second is the federal agency regulation, which is issued by OMB through the Code of Federal Regulations, shortened to CFR. We will spend a good portion of time discussing the CFR, as all recipients should be familiar with this regulation and implement the requirements in their internal processes and procedures. Third, we have the award terms and conditions, which recipients will find in their grant award documents. These conditions are acknowledged and accepted when the award funds are accepted, and all recipients should be familiar with and abide by the terms and conditions of the award. These are especially important because some conditions may hold funds, so you want to become familiar with all conditions of the award before expending funds. Lastly, we have the federal agency policies. You will find these amongst various documents, such as the DOJ Financial Guide, the COPS Owner's Manual, and the Individual Program Solicitation. Each of these documents contain information pertinent to the administration of the award and specific to the award program, like in your program solicitation. As I mentioned, we will spend some time going through the Code of Federal Regulations. This is where you will find the rules published by the federal government for the administration of your award. Many of you have heard of a big change with the CFR recently, and we'll go over some of those changes shortly. First, we want to briefly discuss the old regulations that should be used for awards that were made before December 26, 2014. I'm sure these look familiar to everyone. These are the old regulations, and as you can see, we have provided a chart that identifies each by the type of organization that follow each of the administrative requirements, cost principles, and audit requirements. For example, the cost principles for the states, local, and tribal governments followed 2 CFR Part 225, and nonprofit organizations followed 2 CFR Part 230. The big change with the CFR that I'm sure everyone is familiar with is the consolidation of all the circulars that were referenced in the previous chart, which are now found in 2 CFR Part 200. The official title of the new regulations is a Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. The new guidance applies to awards issued after December 26, 2014, and will not apply retroactively to awards made prior to this date. However, there is one exception to note, and that is the audit requirements. These requirements will apply to audits of fiscal years for the recipients, which begin on or after December 26, 2014. The purpose behind the creation of the uniform guidance was an effort by OMB to reform and strengthen federal grant management by creating resources to achieve evidence-based outcomes, better target financial risks, and ease administrative burden on recipients while reducing the risk of waste, fraud, and abuse. In the new uniform guidance, you will see that OMB has streamlined the federal government's guidance on administrative requirements, cost principles, and audit requirements for federal awards. In the past, as previously discussed, there were different circulars for the different types of organizations. The new regulations apply to all types of organizations. Another requirement for all awards is that all non-federal entities are subject to suspension and debarment regulations, which restrict awards, subawards, and contracts with certain parties that are debarred, suspended, or otherwise excluded from participation in federal assistance programs or activities. Exclusion records from EPLS can be found through a search of the entity and individuals in SAM.gov. In addition to the suspension and debarment certification that is submitted by the applicant during the application process is the drug-free workplace certification. All applicants must meet the requirements in 28 CFR Part 83, which identifies the measures that organizations are required to maintain on an ongoing basis to ensure a drug-free workplace. The other certification that applicants are required to submit with their applications regards lobbying. All applicants must certify that they understand the restrictions on lobbying and do not engage in the restricted activities. Any violation of these restrictions may result in a fine of $10,000 to $100,000 for each occurrence, so it's important to understand the restrictions. Additional guidance can be found in the DOJ Financial Guide. If you have a federal grant, cooperative agreement, or contract, you cannot use federal funds to pay a person for influencing or attempting to influence an officer or employee of an agency, a member, officer, or employee of Congress, or an employee of a member of Congress in connection with the awarding, making, or entering into of federal grants, contracts, or cooperative agreements, or the extension, continuation, or renewal of any of these. All applicants must submit the certification with their application. The new regulations, 2 CFR 200, are broken down a little different from the previous regulations and are now found in one location, divided by subparts and appendices. We'll take some time to highlight some important pieces of the regulations. We'll start with some basic standards that must be upheld for all costs under your award. First, all costs must be allowable and necessary. Some guidelines for determining allowability include the necessity of the item to the performance of the award, that the costs conform to any limitation or exclusions in the guidance and other applicable regulations, and that they are treated consistently whether they are funded by the federal award or not. Next, costs must be reasonable. A good rule of thumb is to perform a prudent person test to make sure that the cost does not exceed what would be purchased by a prudent person. And last, all costs must be allocable, and the portion that is charged to each funding source should be relative to the benefit received. All of these standards listed here are reviewed by your financial analyst when the award budget is reviewed. So if you receive additional questions about a cost, it may be in reference to one or more of these standards listed here. Additional standards that are included are that costs should not include a profit, and that applies to both the direct recipient and the subaward recipient's costs. Costs should also only be claimed against one award and should not be shifted from one award to another to overcome any funding restrictions. And lastly, recipients should ensure that their costs are permissible under all state and federal laws and regulations that apply to them. We're going to take some time to discuss how costs are classified, and this will help in the beginning stages of creating your awards budget. Costs are classified as either direct or indirect. Direct costs can be identified with a particular project or activity, or those costs that can be directly assigned to activities easily and with a high degree of accuracy. For example, staff salaries and their related benefits for time spent on activities related directly to the award are considered direct costs. Additional direct costs can include consulting costs for contracted services related directly to the project objectives, project-related travel for staff, and materials and supplies that are purchased for use on a specific project. On the other hand, indirect costs are incurred for a common or joint purpose which benefits more than one activity and cannot be readily assignable to one specific project or activity. For example, indirect costs may include, but are not limited to, maintenance costs of buildings, depreciation, various types of rental expenses, and the salaries and related expenses of executive officers, personnel administration, and accounting staff for their time that is not directly attributable to the award. In order to recover indirect costs, recipients must have either a negotiated and approved indirect cost rate agreement or elect to use the de minimis rate, which we'll discuss in a few moments. But first, an indirect cost rate is a tool that is used to determine the portion of indirect costs that is shared by each program. The recipient organization uses their audited financials to determine the portion of indirect costs incurred and submits this information through a proposal to their cognizant agency for review and approval. The approved indirect cost rate agreement will contain the final indirect cost rate, the type of rate, the effective period, the base to which the rate is calculated, and much more. There are various types of indirect cost rates, as you can see listed here. First is a provisional rate, and this temporary rate is used for a future period that does not have a completed audit for the fiscal year. However, once the audit is complete, the recipient and their cognizant agency will make adjustments and issue a final rate for that period. Next listed here is the predetermined rate. This rate applies to a specific current or future time period and is generally not adjusted. Last is the fixed rate, which also applies to a current or future time period like the predetermined rate, but differs in that it can be adjusted at a later time. The fixed rate is based on estimated future costs, but when the actual costs are known for that period, an adjustment can be made to make up for the difference. Another change with the new guidance is the addition of the de minimis rate. The use of this rate is an option for recipients and subrecipients that have never negotiated a federally approved indirect cost rate agreement. The de minimis rate is applied by charging 10% of modified total direct costs, also referred to as MTDC. Modified total direct costs include direct salaries and wages, applicable fringe benefits, materials and supplies, services, travel and subawards up to the first $25,000 of each. That's regardless of the period of performance of that subaward. MTDC excludes equipment, capital expenditures, participant support costs, and the portion of each subaward in excess of $25,000. You can find the full definition for modified total direct costs in Part 2 CFR 200.68. The de minimis rate is charged without having to negotiate an indirect cost rate agreement. Recipients must charge costs consistently as indirect or direct, and the rate must be used consistently for all federal awards. This rate may be used indefinitely or until an organization chooses to negotiate a rate. A few additional items to note are that the regulations do not supersede limitations imposed by law. As we discussed earlier on, the order of precedence should be followed in determining restrictions on funds. Also, these regulations do not determine the amount of funding the federal agencies administer through their awards, nor do they provide any additional funding for indirect costs. When awarded funds, the recipient must budget appropriately for both direct and indirect costs. Additionally, the regulations do not provide guidance on how federal agencies should use funds, nor do they relieve direct recipients of their stewardship responsibilities for federal funds. Another component of the regulations within the cost principles is the selected items of cost. These are used to establish the allowability of certain items of cost. This part lists out many types of costs and details the circumstances in which each cost is allowable or unallowable. You won't find every single cost in this section, but it's a good outline for many types of costs. We've noted here a few types of costs that you can see in the selected items of cost. For example, first listed here is advertising and public relations. If you reference this in the CFR, you will see that there are various occasions where these costs may be allowable, but also unallowable. It's important to check the regulations to determine their allowability. Another cost listed here is alcoholic beverages. I'm sure everyone knows that this is not an allowable cost. Some additional selected items of cost include entertainment costs. Any cost of entertainment, including amusement, diversion, and social activities, and any associated costs are not allowable. There are some exceptions listed in the regulations and should receive approval from the federal awarding agency prior to incurring the costs. A final note for the selected item of cost is that even though a cost may be identified as allowable in the CFR, you want to make sure that the same cost is still allowable for the federal awarding agency and does not conflict with any agency or program restrictions. If in doubt, check with your program contact to ensure compliance with all requirements.
Supplanting. DOJ funds must be used to supplement existing funds for program activities and may not replace or supplant non-federal funds that have been appropriated for the same purpose. Federal funds must be used to increase the amount of funds that otherwise would be budgeted for these purposes in the absence of DOJ federal funding. On this slide, we have an example that will relate to what is considered supplanting. State funds are appropriated for a specific purpose, and federal funds are awarded for that same purpose. The state replaces its state funds with federal funds, thereby reducing the total amount available for the stated purpose. The result here is supplanting. For the purposes of your DOJ award, supplanting means replacing state, local, or BIA funds that otherwise would have been spent on law enforcement purposes with federal funds. State, local, and tribal governments are prohibited from supplanting throughout the grant period. This means that your agency may not use DOJ funds to pay for any equipment, technology, services, or other items which, in the absence of the DOJ award, would otherwise have been funded with state or local funds or funds supplied by the BIA. For additional information on supplanting, please review the appropriate DOJ award resource material for the award that you have received funding for. On this slide, we will cover match, cash versus in-kind. There are two kinds of match. Cash match, which is considered hard, includes cash spent for project-related costs. An allowable cash match must include costs which are allowable with federal funds. The second kind, third-party in-kind soft match, includes but is not limited to the valuation of non-cash contributions. In-kind may be in the form of services, supplies, real property, and equipment. For more information, please read the specific award announcement and award notice for match requirements applicable to your award. On this side, we have an example of an OJP-OVW match calculation. COPS match. The COPS office offers awards with a cap on the federal amount of funds available, while at the same time imposing a requirement to meet a minimum amount of local match funds. As a result, the differences in total cost estimates from grant to grant can make the percentages of federal funds to local funds be vastly different. If applicable to your award, recipients are required to contribute a local match of at least 25% towards the total cost of the approved award project, unless waived in writing by the COPS office. The local match must be a cash match from funds not previously budgeted for law enforcement purposes and must be paid during the award period. The local match contribution must be made on an increasing basis during each year of the 3-year award period, with the federal share decreasing accordingly. For additional information on local match requirements, please review the appropriate DOJ award resource material for the award that you have received funding for. Sources of match. Sources for local match requirements may include the following: non-federal asset forfeiture funds, subject to approval from the state or local oversight agency, funds from state or local governments that are committed to matching funds for your program, funds from federal programs whose statutes specifically authorize their use as matching funds, and or funds contributed by private sources. Procurement and contract general guidance. Award recipients must follow their own policies and procedures on procurement as long as those requirements conform to the federal procurement requirements set forth in the Uniform Guidance 2 CFR Part 200.318 General Procurement Standards. Award recipients must follow their own policies and procedures on procurement as long as those requirements are more restrictive than the federal procurement requirements set forth in the Uniform Guidance for General Procurement Standards. Failure to make the appropriate choice may create possible audit findings and or potential repayment of federal funds. Procurement procedures must be formally documented by the non-federal entity and periodically reviewed to ensure compliance with applicable regulations. This process should begin to build a foundation for a successful audit trail. Non-federal entities must maintain written standards of conduct covering conflict of interest and employee participation in selection, award, and administration of contracts. Written procedures for procurement transactions must ensure that all solicitations incorporate a clear and accurate description of the technical requirements of the material, product, or service to be procured. In general, award recipients are required to procure funded items through full and open competition consistent with the standards of 2 CFR Part 200.319 Competition. The non-federal entity must ensure that all pre-qualified lists of persons, firms, or products which are used in acquiring goods and services are current and include enough qualified sources to ensure maximum open and free competition. Also, the non-federal entity must not preclude potential bidders from qualifying during the solicitation period. Contracting officers must publicize contract actions in order to increase competition, broaden industry participation in meeting government requirements, and assist a variety of small business concerns in obtaining contracts and subcontracts. In addition, one or more of the following methods may be used: preparing periodic handouts listing proposed contracts and displaying them, assisting local trade associations in disseminating information to their members, making brief announcements of proposed contracts to newspapers, trade journals, magazines, or other mass communication media for a publication without cost to the government, and placing paid advertisements in newspapers or other communications media subject to certain limitations. All attempts to advertise should be documented and included in the contract file. Local preference laws generally let municipalities award a government contract to local businesses despite the fact their bids may not be the lowest. Many believe that local preference laws stimulate local economies. However, some argue that local preference laws do not help the community and are fundamentally unfair. Unless authorized by federal statute, all procurement transactions must be conducted in a manner that prohibits local preference laws. For additional information on procurement, please review the appropriate DOJ award resource material for the award that you have received funding for. All sole source procurements in excess of the simplified acquisition threshold set in accordance with 41 United States Code 1908, currently set at $150,000, must receive prior approval from the grant-making component before entering into the contract. Procurement by non-competitive proposals is procurement through solicitation of a proposal from only one source, sole source, and may be used if the federal awarding agency or pass-through entity expressly authorizes non-competitive proposals in response to a written request from the non-federal entity. A sole source justification request should be submitted if a recipient determines that the award of a contract through a competitive process is infeasible. The federal agency may authorize a non-competitive proposal if one or more of the following circumstances apply. The item or group of items or service is available only from a single source. The public exigency or emergency for the requirement, such as emergency repairs, will not permit a delay resulting from competitive solicitation. Competition is determined inadequate after solicitation of a number of sources. Here we have a sole source sample outline. Provide a narrative description of items or services. This narrative should be a full description, brief but concise, of the supplies or services required to meet the agency's needs. It is not required to go into minute details, but to offer a full description of who, what, where, when, and why. In addition to a technical overview, The description should include a discussion of where this requirement fits into the overall program. In example, briefly state how this requirement was purchased in the past, if future requirements are planned, if they will be competitively acquired, and if not, what action will be needed to avoid a follow-on non-competitive procurement. Provide the estimated price of this requirement. Include a dollar amount, unit, and total if appropriate. This estimate is based upon, in example, history of prices or program manager's expert judgment based upon the similar requirements or other appropriate description of the rationale used to determine the estimated price, government estimate. Explanation of why it is necessary to contract non-competitively are to include organizational expertise, management, knowledge of the program, responsiveness, expertise of personnel. Prepare a statement explaining the time frame for this contract and include any potential impact for missing targets or deadlines. Be sure to include a monetary value. Describe the circumstances which lead to the conclusion that there is only one source from which this requirement may be satisfied and which meet the factual test for the use of the exceptions cited above. Justifications shall be supported by verifiable facts rather than mere opinions. Documentation in the justification should be sufficient to permit an individual with technical competence in the area to follow the rationale. A lack of planning, either from a delivery or funding viewpoint, is not sufficient to justify non-competitive procurement. This section may be used to add factual information to clarify, expand upon, or defend the unique classifications, character, or nature of the acquisition generally cited earlier. Explain how this will be a greater benefit than the alternative of free and open competition. Describe nature and description of action being approved. This item shall include project identification, such as authorizing legislations, including citations, or other internal program identifying data such as title, purchase order, contract number, etc. Due to the circumstances described below, request the following be acquired using a non-competitive procurement in support of BLM requirement 4, using an example of software maintenance. Be sure that you have addressed and remedied any actual or perceived conflict of interest issues before proceeding with the contract. Also remember to document all actions taken to ensure that the issue was resolved. Bulletin 3.5 tells departments and agencies that using a sole source contract might be appropriate when time is critical for performance of the required services, such as emergency repairs. However, the record shows frequent use of this justification for situations that were clearly not emergencies. Furthermore, certain tight timelines for contracting appear to stem from poor planning. An urgency of an agency's own making should not enable a circumvention of the competitive bid process. For additional information on sole source, please review the appropriate DOJ award resource material for the award that you have received funding for. On this slide, we have a list of some contracting do's. Number 1, compete. You must provide for full and open competition consistent with the procurement standards. Prepare an IFB, RFP. You must develop and incorporate clear and accurate descriptions for technical requirements, specifications, statements of work, or other required documents used in your procurement transactions. Maintain a bidder's list. You must ensure any pre-qualified lists of persons, firms, or products used in acquiring goods and services are current and include enough qualified sources to ensure maximum open and free competition consistent with the procurement standards. Conduct interviews. You must make awards under your procurements only to responsible contractors that can perform successfully in accordance with contract terms and conditions. Obtain prior approval for sole source. All sole source procurements in excess of the simplified acquisition threshold must receive prior approval from the grant-making component before entering into the contract. Make documentation available. You must maintain records sufficient to detail the history of any procurement action. On this slide, we have some contracting don'ts. In order to ensure objective contractor performance and eliminate unfair competitive advantage, contractors that develop or draft specifications, requirements, statements of work, or invitations for bids or requests for proposals must be excluded from competing for such procurements. Some of the situations considered to be restrictive of competition include, but are not limited to: place unreasonable requirements, don't include unreasonable or otherwise unjustifiable requirements in your procurements that would be restrictive of competition, require unnecessary experience, don't require unnecessary experience or other unnecessary criteria or elements under your procurements that cannot be justified or supported with your procurement procedures and the procurement standards. Engage in non-competitive pricing. Don't allow for, engage in, or facilitate non-competitive pricing between firms or affiliated companies under your procurement transactions. Engage in organizational conflicts of interest. The non-federal entity must maintain written standards of conduct covering conflicts of interest and governing the actions of its employees engaged in the selection, award, and administration of contracts. Require unreasonable timeframes. Don't require unreasonable timeframes or performance under your procurements. For additional information on contracts, please review the appropriate DOJ award resource material for the award that you have received funding for.